Let's bring in Wells Fargo's Chief Financial Officer, John Shrewsberry, who joins us on the phone in a first on CNBC interview. John, we realize that you could easily have canceled this interview that we normally do on a quarterly basis. We appreciate that you did not do that. We're just sorry that you're on the phone and not on camera, but welcome. Good to see you.
Thanks for having me on. I look forward to it every quarter, and frankly, during a quarter with a lot of news, it's good to get out in front of people and to talk about it.
Boy, that's an understatement. A lot of news. Let me start with some news just today. You know, no doubt, a little while ago, the state of Ohio joined a list of other states in suspending your company from doing business, holding a business relationship with the state on any offerings they have for 1 year. How much of a hit is this causing your company right now? California, Illinois, and others are doing the same thing right now. How much is that affecting your company?
Sure. So that business is part of our wholesale banking business, which is where we do all of our corporate lending, our underwriting, including for public entities. And there are a handful of customers that we've heard from where they've suspended that type of business. Because of the size of Wells Fargo, because of the diversification of our business, it doesn't have an impact, a measurable impact on our aggregate results. I mean, but those are customers who we really want to win the business back from. We focused hard on it for a long time. We've provided great service to them, and we're going to compete fiercely to win the business back when this time frame is over. But not a big mover for the company overall.
I see here that customer visits with branch bankers were down 10% on the year. John, customer checking account openings down 25%. Dick Beauvais, as one example, saying he thinks you guys will struggle to hit your numbers, at least in part due to litigation costs. And Tim Sloan, the new CEO himself, said he thinks things will get worse before they get better. On what front do you expect things to get worse? Politically speaking, earnings, further customer fallout?
So we included today in our quarterly information an extra 10 pages right at the beginning to help people just very transparently understand what's going on inside the bank. Among other things, we showed what happened in the month of September with different types of account openings, just so people could really understand the magnitude. Those account openings don't really, in the short term, translate into financial statement outcomes, but they do reflect the fact that our own team members were on their back foot during the month for all the reasons you can imagine, and we're changing the model of how we serve people in the stores, in the branches, in the fourth quarter and going into the beginning of the year. So it'll definitely have some account growth impact and some revenue impact down the line. But with respect to our numbers and litigation, et cetera, there's no question that over the course of the next couple of years, we'll be dealing with incremental matters. We've filed an 8K that describes what kind of stuff has come in, and it all has to be attended to.
How much are you going to set aside for litigation costs, John?
It's too early to tell. I mean, this is all brand new, and there are no actual. I beg your pardon?
Ballpark?
There's no way to put a number on it. You know, we set aside for things as they happen. We'd already reserved for the $185 million that was in connection with these settlements that were announced last month. So, you know, we make $20-odd billion per year. We've got a very sound foundation. So we'll grapple with it. We'll address each one of these things that comes through and run it down. You know,
Tim Sloan said this morning on the conference call that, and I'll quote him, "We have a specific action plan in place to lead our company forward, and it includes being transparent in our communication." Can you give us a sense what's in that plan that you're going to employ to win customers back?
Sure. So there's communication plans with each of our stakeholders, and you can imagine who they all are. Customers, team members, shareholders, regulators, and others are at the top of that list. There are metrics that help us understand what's happening in the different businesses every day so that we know that we're getting out in front of customers, we're communicating our message. We're describing what went wrong at Wells Fargo and the fact that we get it and that we really need to make, in some cases, aggressive change, ongoing change to improve the way that we approach customers, specifically in the retail bank where this occurred. But we're making sure that we're cautious everywhere.
And the cautiousness also is on the investor side, John. Even the numbers that you put up, while they beat on the bottom line, beat on the top line. The question is, what's the trajectory for the future? So to quote KBW, for example, they say the biggest takeaway for them after listening to your call today was that management doesn't know what the consumer bank will look like in the future. It sounds like it's going to have more of a service-oriented culture. That may be more of a Wachovia import from that takeover than something that's core to how Wells Fargo does business. Can you confirm that that kind of transition is underway?
I can. In fact, we've announced that in our retail bank that we're moving much more to a service orientation, and we're going to be incentivizing our team members for the way customers feel when they do business with us, including the richness of the relationship, the depth of the relationship. We're a leading provider of everything that our customers want from a financial services firm, and we want to reward our people for making sure that customers get what they need. And that they're happy with it, that they use it, that it's service oriented. That is our commitment.
John, have you considered giving back some of the bonus money that you have received over the last couple of years, bearing in mind that you've been the CFO for 2.5 years? We're talking about roughly a 5-year period where these accounts were created. And presumably some of your bonus money may have been based on hitting some benchmarks that were achieved because of the creation of those fraudulent accounts. Have you offered to give some of that bonus money back?
So no. There's two parts to that answer that I think are important. One is, have benchmarks been hit as a result of this? And as you guys have seen in the information, there was no revenue impact here. This was an incentive mechanism for employees that was ill-conceived and poorly executed, that led to behavior that didn't help anybody, but it wasn't generating revenue, and it wasn't improving our bottom line, so it didn't work for anybody. And with respect to our incentive mechanisms, we very specifically delay the amount of compensation that senior people get at Wells Fargo over the course of years so that realized outcomes can be experienced and reflected in the stock price, et cetera. And they're at risk for the performance of the company overall.
All right. Then I have a follow-up question, if I may. I mean, this has been going on for 5 years, and people had lost their jobs. Over 5,000 people lost their jobs as it was discovered over a 5-year period that they were opening these fraudulent accounts. Why not end the sales incentives then, as soon as you found out this was going on? Why wait until after it became public and you get this whole PR nightmare that you face right now? Especially if it wasn't adding that much to your bottom line.
Bill, it's a great question, and I think if people had the perspective in the moment of exactly of what they were understanding, what they were seeing and dealing with, then they probably would have. There were a lot of measures that were taken over time. They just weren't enough. They were dialing back the reliance on sales goals as a measure in that part of the firm. We've changed the leadership. We've changed the risk management. Now we've changed these approaches to how people are incentivized. But those are fair questions.
Are there going to be more layers, John, before you go, of management that are eliminated, either because of those specific jobs and people who are in them, or because it's a way of cutting costs and overhauling? I think John Stump had said at one point there were 9 people between him and some of the behavior that was going on in these branch offices. Will there continue to be 9 people going forward?
Well, so there are two things going on. One is that the board has an independent review of all of these matters that's underway, and that'll get to the bottom of who incrementally should be held accountable. And separately, we have new leadership. Mary Mack is running our retail bank. She comes from outside of the retail bank. She's a great leader. She's in her early period in the job, but undoubtedly she'll make the changes that she thinks are necessary at a minimum with respect to expanded patrol and those layers that you referred to, but others probably as well.
John, before we let you go, I need to personalize this. A few weeks ago, I was in Los Angeles emceeing a big dinner at the Beverly Wilshire Hotel, and a waiter went out of his way and came up to me and said that he had been a Wells Fargo customer and that 2 accounts in his name had been opened without his authorization. And he was very, very angry about that, as you can imagine. And I think about him all the time now as I watch this story unfold. Here's a guy that has no voice in any of this, but yet he was one who was violated in his trust of the bank. What do you say to people like that waiter who need to hear from the chief financial officer and indeed from your boss that they can still trust Wells Fargo? What do you say to them?
Yeah, I say he should be mad. we absolutely had something in our system that was broken. We're committed to fixing it. And if we can talk to him, if you want to pass along his information to me, we'll talk to him. We'll deal with it. We'll make sure that, and we already would have made sure that if he was out of pocket, that that's been made right. And if there's any secondary consequence of what happened, then we'll take care of it. There's no denying that.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.